Yeah. Hi, everyone. This is the latest in mortgage today. We're going to let some of our participants hop in here and we'll get going in 30 seconds to a minute or so. So, Brice, are you then get snow every once in a while? I
We
forget
are
where you're
lucky.
personally located.
So I'm in Lubbock, Texas, and
Oh,
so we get cold, but we rarely get snow. And so when it comes, it's normally there for a day and then gone the next day. So
yeah. Yeah. We're
I
not,
think
I'm in Minneapolis, in the Minneapolis market. So we've got probably 5 inches on the ground and it's snowing still. Um, and it probably won't go away now until at least March.
there we go. I love the guns up in the chat. We got a big game coming up tomorrow. So win and we get a bye. Lose and then we'll probably host. So it'll be fun.
Yeah, that's Tony on our team. She's uh she's down there in Texas with you. All right. Well, I think we'll go ahead and get started here on this Friday. Thanks everyone for joining us. We still have some people that are definitely filtering into the conversation. And thanks for joining us for the latest in mortgage today. I will introduce him in just a minute, but this is Brice Foster, folks, and I will give him a formal introduction in just a minute. Each episode of this show, we have a lender member who joins us and is the greatest host to unpack kind of what's new and what's going on in mortgage, what's changing, and what it means to the lenders that are in our network. It's a place to exchange ideas and everything. So we do want you to hop into chat and talk with us while we were on here. It's a place where you can speak out, make contributions to our network and the industry at large. It's at 2 Fridays a month. And so please register, have your team register, and join us live or listen to the podcast. I know some of you do that very religiously as well. With me today, I have Brice Foster. Brice is the SVP and the Mortgage Division Director at Spirit Mortgage, which Spirit Mortgage is part of First United Bank. I would love it if you would introduce yourself and then just share a little bit about Spirit Mortgage and who you are.
Yeah, absolutely. So thank you, Faith. One, it's an honor and a privilege to be able to finally do this. Spirit Mortgage, as Faith said, is the mortgage division for First United Bank, which is a large regional community bank based in Lubbock, with branches, across West Texas, or what we would consider culturally West Texas, as we have branches that move out into the Wichita Falls area as well. But we've got 20 locations in our network, branch locations in our network. We're a $2.4 billion bank by asset size. Mortgage, on the other hand, is relatively small as it relates to the overall piece of that puzzle. But again, happy to share all that I can as it relates to what it's like to be a bank owned mortgage division.
It is different. We have found that out, that there are some differences. So I love it that the audience has that perspective of that's where you're coming from. We were just talking about snow, weather, those types of things as we got on here. You want to talk about December just a little bit and get people's feedback in the chat?
Yes, absolutely. So I think this is appropriate because I'm not going to say I necessarily have a love-hate relationship with the month of December, but it kind of brings two very unique emotions to the forefront for me each year when we get to December. One, it's a time of great joy, obviously, as we move closer and closer to Christmas. And all that comes with Christmas, with our family, with our friends, parties, the celebrations for end of year. I myself, my daughter turned 18 years old yesterday, my
Oh,
oldest. So
wow.
I have my first of four seniors in the house this year. So it's all more unique for us this year in the month of December. But also with December comes a feeling of dread. Um,
Okay,
uh,
share.
we know that here in less than 30 days, we'll all be restarting at zero, right? And so with that comes budgeting, With that comes your projecting. With that comes, personnel evaluations, right? Inner office moves, things like that. And so it's all happening at the same time that all the fun stuff is going on as well. And so I would be curious for all those that are listening right now, how do you balance both of those well? Because every year I tell myself, I'm not going to do this. I'm not going to wait till the last minute. I'm going to try to enjoy right this month and the holidays. But again, it just seems that the emails and the requests and the ask for information just keep coming. So I would be curious how other members do the month of December. If they do the planning before, yeah, what balance? Agreed. You do the
Jeremy.
planning before the month of December? Do you roll that into 26 and just get a late start? I'd just be curious to know what other folks do, whether they be bank owned or otherwise.
Yeah. So Jeremy Davis popped into the chat for any of you who can't see it, that says, "What is this balance in quotes that you speak of?" I think we all kind of suffer from that a little bit too. I think that things change as you get a little bit older. So I have kids that are much older than you do, and my holiday season has become actually really pretty quiet from a personal perspective. But the year-end stuff for work always gets me. It's like I know I have to do reviews for all of my great employees that I have. And it's relatively easy because I have the best team that I've ever had in the industry. So, I mean, that makes it a little bit easier, I feel like. But they always sneak up on me at the same time. So, others other than Jeremy, pop in there, how you do it and what you do and how you prioritize. And we'll come back to that from time to time
Yeah,
as
that'd
we're
be great.
talking. Yeah, yeah.
So if anybody has that magic answer to what this balance is, we would all love to know. And then you could start your own consulting firm if you just could answer this simple question.
I've never had it and I've always strived for it, but like over the years, I've never had it. I just don't have it. And it's something that I think now maybe I don't desire it that much. And I kind of like the craziness of
Yeah,
December. It's like, is it just in my blood, kind of like mortgage is for most people? That it doesn't happen. But pop into the chat, guys. Let us know how you do it and how you feel about that as we continue talking here. I thought we would start out with like one of the hot topics of the last couple of weeks. Um, One that I think that everybody kind of expected, but didn't maybe expect the amount associated with it, which is the cost of credit. So in the last couple of weeks, everybody's been having conversations with their credit providers um, about what the cost of credit is going to be for next month or next year going forward, I guess I would say. Freddie did an analysis of expenses recently that I thought I would mention that the average mortgage cost to produce a mortgage is $11,800 at the second quarter of 2025. It is down a little bit from where it was. The first quarter was 13,400. And so, but it's only down to what it was in the third quarter of 2023, which it was 11,600 back then. Um, I would just love to hear from you, like what your reaction was to I would assume it's probably an increase. I've not heard of anybody's decreasing or even staying
yeah,
flat. So I'd love to hear kind of like what you've experienced related to that in the last couple of weeks.
yep. We've had those conversations with our folks as well, and we did experience a increase on the higher end of that projection, or that average that people have been talking about. And so, yeah, it didn't come as a shock, of course, because we all expected this, but it came as a huge disappointment. For just another thing to layer on to how we do what we need to do in 26 to continue to be successful. And so we have toyed with at various stages throughout our credit journey and figuring out how to, again, not have that be a loss leader for us, as an expense item on our P&L. And so I think, there was a Housing Wire article that came out maybe last week that talked about, okay, is it time for the industry to all unite and collect upfront for closing or for credit, as opposed to wait till closing. So that's out there. So I'd be curious to know if anybody is doing that today. I think the approach that we have determined that would be best for us to tackle this moving forward is to not do that, because it doesn't really work in our West Texas mentality to charge for credit upfront, specifically with many of our competitors. But I think we're going to move to a closed loan model, to where we'll have a set fee that'll be elevated for our closed loan borrowers, to help offset some of the costs for those loans that fall out of the pipeline. So I think that's where we're moving, running all the traps that are related to that via compliance and everything else. But I think the goal would be for us to do that and hopefully offset some of this cost that we see on an annual basis, and then hopefully look toward a time when there can be a more equitable solution and not a monopoly.
Yeah. So a couple of things related to that. The average increase that we've heard, I don't know if it's different for the rest of you, but please again chime in if you've seen something different, was 30 to 40% of an increase for this year. So that's the average that we had kind of seen and kind of heard of. We did have a call with some of our larger lender members that they initiated earlier this week, and they were all talking about like what are they going to do, or any ideas about what to do related to it. And I don't think that any of them were also charging upfront for credit at this point in time. It's always so hard to be the first one um,
Mm-hmm.
to do something because we all know, you know, that competition, easily learns about that and leans into that. And then it causes LO disruption a lot of
Mm-hmm.
times about why are we doing this when other people aren't. So I think that one is a place where
You never want credit to be a deterrent, for
correct.
somebody to ultimately be, to use you to, become part of the American dream. So I think that's the biggest reservation that everyone has is, hey, if folks know that, they're not going to use me, they're going to go down the street. So I don't know if that would ever take off unless we all join together and say that was going to be an industry practice. But again, we're looking at the closed loan model. I'd be interested to know if anybody else has looked at anything different. I know soft pull, right, is a piece of that puzzle from a layered perspective. Do soft pull, those that fall out, lesser cost than a full tri merge. So I know some folks do that. Anyway, just curious.
Yeah. Yeah. I think the other thing that was talked about on that call is like if you're doing a closed loan model, depending upon how your numbers work out, the increase in that closed loan model with a 30 to 40% increase is quite substantial. And so I think people are just trying to figure it out at this point. Have you seen in your organization, Freddie says that the cost to produce a mortgage has gone down a little bit, not a lot, but a little bit. Have you seen that happen in your organization?
Yeah, we took an approach in 25 to really move as well as we could into automation, and so automation has helped us reduce cost there, just via the automation piece. But then the other way that we've tried to hold, the cost to produce a loan down is through personnel. Obviously, that's the biggest portion of your
Yeah.
P&L, from an expense line item, and so we have a very unique base of folks, with Texas Tech University being here in Lubbock, as a springboard for folks to come and join us in various ways. But again, we do try to do a really good job of keeping those personnel costs low, on the operations side, but then also on the origination side, while always being competitive with everyone who's in high demand today.
In the chat, would you mind to elaborate on your automated efforts, automation versus AI? So what kinds of things have you done within your process that have really helped you?
And so the first thing that we did, which was a huge thing for us, was we implemented a new POS this year that helped to
Okay.
automate many of the things that we had been doing from a manual perspective before. And so those two things working in tandem, right, allow that person to do more. related to our organization, which has helped us keep that FTE count low. So using the automation in conjunction with personnel has really been what has driven us to be able to do that. So the POS before was just doing a job, and then everything else was manual thereafter, to where now POS with the integrations with your VOIE, with your VOA providers, a lot of that is being done up front for us now, which has freed up our personnel to be able to do additional tasks, cross
Yeah.
training, to where we don't have to have a backup in every single position because we're able to have folks cross train now. So I know the question also mentioned, AI. There's an AI component to that, from the VOIE and the VOA piece, but we haven't driven much more into AI beyond, what's available from our vendors.
Yeah. Sounds like you're doing great things over there. You've got some young people, it sounds like maybe coming into your organization. So you're developing some additional talent for the industry, and then you're trying to use your employees at the highest level that you can, having them work on higher level tasks versus a lot of manual work, which I think a lot of times is what keeps people in your organization.
Yeah. And so, you saying it like that makes it sound fantastic. And I feel like my job should be easier than it is when you say it like that. But yes, it's a constant, right, battle to maintain one, our culture, which I think is unique to us here in West Texas and to the bank, and what allows us to retain our employees. And so, yes, but also, it's always a struggle with competition beating around every bush, everywhere we are.
Yeah, and with the market where it's been at, a competition I feel like is a whole different thing now than it was, even several years ago. It just looks a little bit differently. One of the things I sat on the MBA town hall that they had yesterday just to listen in, and while there wasn't anything that was extremely surprising on there, one of the things that was talked about related to credit was the tri merge versus the buy merge. That came out in the press earlier this week that NBA was a proponent of that. But what was mentioned on the call yesterday was, why can't you just do a single poll? We think that this should be easier. Every other industry that relies on credit, is only doing a single poll. Why can't mortgage at this point in time be a single poll? So I thought that was interesting that they kind of skipped from the announcement of, we're going to support, why don't we move to a buy merge, to a single poll as of that conversation yesterday. How do you feel about that?
Well, I mean, from a practical perspective, I mean, I think it would be great, right? I mean, it would improve an efficiency, it would improve cost for sure. But I worry sometimes about these proposals, being that this system has been in place for as long as it has, and other things that the administration, right, floats from time to time, that again may sound great, but may have implications that all of us are not actually prepared for, and so again, if we only pull a single, that may eliminate, right, borrowers right off the bat, as opposed to
It
the
could.
try to the buy merge. And so
Yep.
I think that's a risk there, for sure. And there is not great differential between the bureaus, but at times there's great differential between the bureaus. And so I think trying to figure out who we as an institution would ultimately want to use to be that
Right.
would be
Right.
a very big decision for us too. So while I like the idea in theory, I would love for it to be tested and discussed in more detail, as we move forward to something. And that's to say, when is Vantage going to be a thing, right? All the other
Right.
options that we have at our disposal. I mean, if we're truly going to improve as an industry, I think it's time that we put all those things, to the forefront, and as a team, with the NBA's support, of course, and our local organizations, figure out what's best for the industry and move on.
Yeah. Yeah, it was funny. It wasn't brought up necessarily because my head automatically went to process, just like yours kind of did. And I think when Bob Brokesmith was speaking about it, it was more towards, this is the way that you would have true blue competition is
True.
if you went to just using a single pull. And so I thought that was just kind of an interesting thing that came out of there. Also, this week, FHFA announced the conforming loan limits and what they are. It's an increase of $26,250. I know that for you, maybe in different markets, I feel like it may impact you, it may not impact you, may not be an impact in your market, but um, what do you think about like that's a significant increase? Um, $832,750.
That's
It's like that's huge.
that's a lot of house in
Yeah,
West Texas for sure. And so, for Faith, like you said, we're impacted probably less than most by that because the majority of our loans fit and have fit here in the last several years within that conforming loan limit. It branching out finally from the 417 that was held constant for so very long was a true blessing. Because as you know, jumbo at times can be very, very difficult.
right,
And again, you lose some control, like we do, if we went from a non-delegated perspective. And so for us, it's better because we're able to grab those few additional loans that maybe fit into that box that didn't before. But we
right,
still have demand for jumbo even out here in West Texas and our bigger markets like Lubbock and Amarillo. And so anytime for us that moves up, it gives us an opportunity to either through a first and a second, right, to help accomplish what the borrower needs for their ultimate goals. What this means long term for price appreciation and how good that is for all of us moving forward, I think is a broader discussion. But for me personally, it's just allows us to help more folks than we may have been able to help last year stay out of that jumbo space specifically.
yeah. Yeah, my only thought related to that is does that how does that impact like housing affordability? Does it impact it at all, or is it just it helps more consumers, get into places with a conforming loan limit? Or does that mean that we ultimately begin to see prices go even higher than what they are?
I don't think it's helping bring it down. I do know that. Now, how much that continues to push it up, the loan limit itself, I
Yeah,
mean, there are the underlying factors from a cost to construct, right, regulation, all those things that have a bigger piece, tariffs, all those things that have a bigger piece to do with the increase. And in our world, we haven't seen anything even retreat at all since the peak from COVID, right? The percentage
right.
increase is much less now, but again, the affordability issue is broader than just the sales price. It's all the
Right.
underlying factors, and then new construction is booming here in West Texas, especially in
Okay.
major markets, but it's not cheap. And when I see appraisals with price per square foot on some of these customs that approach $400 for us out here is, you know, just a few
Huge.
years ago, we would have thought you were insane.
Yeah, exactly. It's that way in our market here too, and there is a lot of building here as well. Not as much at this time of the year. We've kind of hit that point where they don't do a lot of new starts, but they've got a bunch of starts that are in process. They try to get them to a certain point before the snow starts to fall up here. But yeah, we've seen the same thing. I mean, I think about it all the time. The first house that I owned, what it would sell for right now, I would never pay that for it. I
No,
mean, it's like, it's a little bit crazy when you think about that.
to it this entire time.
Yeah. 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 So another topic that we were going to talk about today is prepayments.
Mhm.
So mortgage prepayments hit a 3-year high, according to ICE. So this was information that came from ICE out of National Mortgage News. Speeds in October rose to 1.01%, highest in over 3 years. Of course, we just saw rates tick down maybe a little bit. So I don't know. What do you think the contributors are to that? Is it competition and people being able to give people a different pricing model? What do you think contributes to that higher prepayment speed?
Yeah, and so we are trying to be proactive on that front too with borrowers that we, helped purchase a home when rates were, 7 plus. And so
Right.
we promised them then that we would be an advocate for them as rates continued to move and then have those conversations. So we're part of the problem, right, as it relates to prepayment because we want to, help all of our folks be in a better financial situation. So yes, I do think
And you want to maintain them, right, as well. You don't want them going somewhere else for that price either.
100%. And what we did back then was, ran programs during certain periods of the year that said, hey, if you do this with us now, when we refi, it'll be no cost, right, from us,
Gotcha.
origination, all the fees that we can ultimately, move away with, we'll do that. And so that hopefully tied them to us then, but then now this proactive approach. So yes, I do think it is rate driven for sure.
Mhm.
And the other piece of the puzzle is just your normal reason for people to to sell and or to move. So, and I don't think it's going away until rates probably stabilize in a more favorable range for all of us.
Yeah, that was what I was gonna ask you as well. I mean, it's like we don't really know what's gonna happen with rates. Are rates gonna stay here? I kind of feel like, they've leveled out at least. There's not a lot of huge swings, and that people have just figured it out finally. It's taken a
Yeah,
long time. They figured it out finally that we're not going back to the twos or the threes. Those are things that, there was a time where people took advantage of that and had the ability to. But I feel like people have finally decided that it's like, okay, well, this isn't going to happen. So then what am I going to do? I'm not going to wait forever to make a move or do things. So I feel like that is part of it as well. And so then when we see those rate drops happen, we're going to have more of those things happen along with people like you that are you're proactively planning that we want to retain our customers. I mean, everybody would love to have the customer for life as well. From a servicing perspective, and I didn't remember to look to see if you guys are, servicing your own. I would imagine as a bank, you have some sort of portfolio or something. How does that
correct.
how does that impact you?
Yeah, so the servicing aspect really doesn't impact us because we don't service. So we sell everything best X for the volume that we ultimately do. We haven't moved into that other space yet. However, the portfolio products that we have, that are
Right.
priced accordingly to bank cost of funds, I mean, those create opportunities for us to refi. And so it's been a nice, supplemental income to our P&L, but the goal is to always move them out of those arms, which is what we have for folks, and then put them into a long-term permanent. So it's going to impact the P&L moving forward, right? Because many of these will get refied over the course of the next year based on where the rate environment is currently. But hopefully, I can continue to replace it as well. So that's the challenge.
Yep, that is the challenge. That is the challenge. So we're like running right onto, we're within 30 seconds of the end of the hour or at the bottom of the hour, which it goes by so fast. This has been such a delightful conversation. Words of wisdom for people like going into 2026. Share with us what you're going to do and after December is over.
Yes. Yeah. So words of wisdom for me are going to be less work related, but more personal. And so I would encourage everyone on the call right now when we talk about balance. Again, and this is on the forefront of my mind right now, having a senior whose last at home Christmas tree will be this year, is
Yeah.
to never neglect all those things, right?
Yeah.
For work, because work will always be here. But the things, families, friends, all those things. So Would love to wish everyone a very Merry Christmas. I hope this time of season is filled with joy and not dread for all of you. And as we work toward that balance, right, we'll figure out a way to get it done. We always do. And then we'll get to 26 and just keep trucking.
Well, Brice, we're going to need to do this again. This was a really awesome conversation. I really enjoyed talking with you today.
Be happy to do
Um, for the audience, Merry Christmas, Happy Holidays. Make sure and come back and join us. We've got one more of the latest in mortgage today during December, so come back and join us on the 19th. And also think about joining us in Scottsdale in February, where those of us that are in the cold can escape the snow for for a little while, and have great opportunities to talk with all the other people in our network like Bryce. So appreciate your words of wisdom today and your perspective. Come back and do it with me again sometime soon.
Love to, Faith. Thank you.
Thank you. Have a great day, everybody.
Bye.